Ira Rothberg, in your Hennessy Focus Fund, you're a fan of Diamond Hill Investment Group. They do back office work and run a number of mutual funds. Stock seems like it's stuck around 120. What's it going to take to get Diamond Hill to the next level?
Well, Greg, Diamond Hill is actually a remarkable growth story. If we went back to the year 2000, they only had $50 million of AUM. And that's right around the same time that the current CEO, Rick Dillon, started with the firm. And today they have $12.5 billion AUM. The reason you may see the stock kind of been in this 120 range for a little while now is that they paid a special distribution at the end of last year. And that's what they've been doing over time with their free cash flow, is returning it to shareholders in the form of a special dividend. We see great things for Diamond Hill going forward. Their strategies, for the most part, have outperformed their benchmark over the long term. They have great people there. They subscribe to a Graham and Buffett type investment philosophy. The marketing is really clicking, and we think that they have capacity in their existing strategies to get to about $30 billion of AUM.
All right, you're also bullish on gaming and leisure properties. Now, this is a gaming company, but it pays a nice 5.6% dividend. So does that make it less of a gamble?
We're less attracted because of the dividend yield relative to what we see in terms of capital appreciation for GLPI. Gaming and leisure properties has a chairman and CEO in Peter Carlino, who's been the most savvy capital allocator in the gaming industry. And now Peter's at the helm of the industry's first gaming REIT, and that gives him a lower cost of capital. If you look at the gaming industry, it's quite fragmented, quite highly leveraged, and we think Peter will be very successful consolidating the industry over time with this new vehicle.
And then finally, you're also bullish on Dick's Sporting Goods. Now, all the retailers sold off earlier this year with worries about the cold weather, but Dick's has certainly come back, had a pretty nice fourth quarter results. They've been doing a lot online, so I guess people aren't showrooming as much at Dick's?
That's absolutely correct. Online's been an important growth driver for them. It was a little under 8% of sales in 2013. In the fourth quarter, their online sales actually grew in excess of 60% year over year. We think Dick's will be a very successful omni-channel retailer in the sporting goods industry. We think in their brick and mortar stores that they can more than double their store base. It's also interesting because they have a new concept, Field and Stream, in the hunting and fishing category, going up against the likes of Cabela's and Bass Pro Shops.
All right, thanks a lot, Ira.
Thank you, Greg.
Thank you for watching The Street.